Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's have a look on euro currency again. So today, as usual, we have prepared a report. It was a bit difficult to express our view in current circumstances because it's a lot of different issues, different factors that now are making impact on the market. But we have tried to find some common thing that actually unite all the recent steps by the Donald Trump and his administration, especially recent opinions concerning recession and what's really going on. And maybe the conclusion that we have made could surprise you, but it exists some reasons to suggest that recession and some dollar weakness currently actually relates to the Donald Trump global targets and how it managed the United States economy. Why? Because the major beneficials of the dollar strength and dollar system, financial system, are superstructure of financial sector in the United States. These so-called Democrat elites, bankers, neocons, and globalists, who are actually riding on big cash flows and squeezing the juice from the United States economy in the different programs, spendings, government orders, in the defense, in the social, Medicare spheres, and everything. And crushing and putting the economy in recession will hurt, first of all, through the dollar weakness, through the collapse of the stock market, first of all, will destroy this superstructure. But it will not be as painful for production sector, industry sector. So maybe in the current circumstances, and then a tool in the hands of the former Democrat elites is, of course, the Fed. So by taking this all together, we come to the conclusion that maybe the recession may be controlled recession. It's maybe one of the goals that Donald Trump currently is following. We're not actually interested with the attempt to estimate the truth of the last resort, so whether we are right or not with this suggestion. But for us, it's more important where the market will go, because we're trading euro currency and actually we should know what's going on here. But all these conclusions that and the processes that we see in an economy, recent statistics, the conclusions that are made by the respectable economists, we also provide their opinions in our report, tells that currently the trend that we have on the euro to the upside should stay at least for a few months, because the new until the new inputs, the big inputs of this data and factors will not appear. This relates as to the European Union as to the United States, because in Europe is also lots of different questions concerning how they will spend this defense fund, where, and more important, where they will get the money for this defense fund, and at what price they will get it. So it's lots of interesting stuff. But since impulse on euro is still strong, signs of the recession in the United States strong, putting it together makes us think, and euro currency actually very close to the target. We are speaking about 112. So, and all these factors together makes us think that reaching of this level in the nearest 1 to maybe 3 months looks relatively simple. It's very interesting, by the way, that the UBS also has changed their target absolutely in the same manner as we did. So previously we talked about the parity and even 90 below the parity. And now talk about 112, and they also have changed from 99 below the parity, and now also talking about the 112. So this is just adjusting to the factors that we're actually getting. So we have to change an opinion if we have new factors on the table. So that's really a lot of things to discuss on the fundamental background. Unfortunately, or maybe fortunately, but on technical part, we can't say as much as on the fundamental one. In fact, we have nothing to make hyper bulls on the weekly and daily charts. Because here on the weekly, we still have bearish stretch pattern that still has no reaction, and its potential might happen and could work. From that standpoint, you have weekly bearish context. But unfortunately, here we do not have any clear bearish pattern that could tell us that the bearish setup starts working. So we can't take short position right now. At the same time, markets tend to overextend in daily and weekly overbought. And from that standpoint, you're in an excellent agreement resistance, which keeps us aside from taking new longs. So if you trade on a daily and weekly chart, currently I also do not see anything what you're gonna do in the current moment. Speaking about intraday performance, here's two moments to discuss on the full time frame chart. The major question, could we treat it as a hand shoulders? And second, do we have really this grabber on the right arm potential pattern? The answer on both questions, shortly speaking, is no. So if you take a look at the futures on the market contract on the euro currency on Chicago Mercantile Exchange, and if you check the charts of the big retail brokers such as the Saxo Bank, Oanda, FXCM, so you will see that we have no grabber. Although my retail chart here, it's also FXCM, shows that we have it. So that's why this bearish pattern is excluded currently. Speaking about the hand shoulders, if you take a look at dollar index, here you could see that hand shoulders look slightly better. It's really harmonic, very accurate with the shoulders, but the problem is with the performance of this part of the pattern. Maybe on the dollar index it looks more or less nice, but if you take a look at the euro, you could recognize two things. The first thing that I already mentioned on Friday is this really slow action. It should be vice versa. So here it should be slow to the upside and fast to the downside, but we have opposite action. Second, which is by my opinion is more important, is take a look what has happened on Friday. This is true that we've got the price at the point that we would like to. And in general, we have correct trading plan. Market has shown this pullback, but take a look that pullback has started not from the points that we have discussed, 1 or 810, but significantly earlier, right at the mostly point where we prepared the video. What does it mean? It means that market, but by some reason, has broken the natural structure of the swings. It has abandoned reaching and completion of the target of the XOP, forming the preparation for reversal in the way of the butterfly, but suddenly turns in opposite direction without any reasons. So we do not have here some strong target or something, or fib level. It's just turned in upside. It means that here some extraordinary, surprising bullish power has appeared, which is definitely not bearish performance. That's why, taking it all together, I would say that in the current moment, I would wait for one session, maybe two, to see what will happen. Because with this stuff on the back, I do not want to consider a short position. If even we could treat it as a hand and shoulders, the market stands in the proper point around the top of the right arm, around 618 resistance level. It's not forbidden, so if you would like to, here's relatively small risk if you will try. Maybe I'm wrong and it's okay with this hand shoulders, market will start dropping on Monday. This also could happen. And so I can't say that it's totally restricted. So you could try to do this if you want. But you just need to take into consideration things that we said, because it increases the risk, although the cash risk will be relatively small. So you will have to play stop just about this area. But personally, I do not want to do this. So I will not try to do this. And then within the one session, we should see whether we are correct on this suggestion or not. So if we will see clear signs that no deep retracement will happen, markets preparing for upper breakout, then probably this will happen. So failure of the hand shoulders suggests move above the top and possibly appearing here the butterfly to the upside. This is common, absolutely common thing when it happens on the ruins of the hand shoulders. It's most case 99% it happens. So that's our view currently. So bulls on the daily and weekly charts now have nothing to do because of the market possession. On the intraday charts, on the first glance, we have the bearish context that it has a lot of flaws that makes me stay aside for a while and see what will happen on Monday and maybe on Monday and Tuesday.